Welcome back. So in this episode, we're going to be talking about volume, open interest, and how to determine a good strike to pick. So volume again is right here. So volume, it just means the number of active people trading this particular contract today. So volume is just within the same day. So you can see there's 26,732 people that actively traded today Apple, the 121 call. Open interest, you see it's a little bit less, it's 7,110. So that means that there's 7,110 people that own this 121 option, call option, but aren't necessarily actively trading it. So the volume is people actively trading, and today open interest is just the amount of people that own it but aren't necessarily trading today. And so what you want to do is for Apple usually has some good volume, but when you're looking at picking which option and which strike is a good fit, we'll get into more details about the charting and how to actually pick. But what you want to focus on is you actually want to focus on open interest and volume being large numbers. And so a large number, usually 500 for open interest and 500 for volume. You want it to be more than 500 just because that gives you a little bit more wiggle room when you want to buy and sell. That way you could get a good price and you're not really getting ripped off. So you can kind of see what I mean between the bid and ask. You see what you're willing to pay. Again, we're looking at this one at $2.14, and what you're willing to sell is $2.11. So it's only really a 3 cents different or a $3 difference. And so that's really good. But if you look at some that are actually low volume, so let's just take GameStop for example, because GameStop, of course, everyone's been hearing about it in the news. And so let's just pick a random date, again, one of the expirations. So now let's look at GameStop. So you see how it's the open interest you could see up here, and the volume is only 292 and 50, 246 and 104. So it's really low volume. So that just means there's not enough people moving in and out of the stock that's going to give you a fair price. And the way to determine that is if you actually look at the bid and ask, you're going to see a wide spread, right? So the one that has very low volume of 50, you could see the difference between that bid and ask is almost $6 difference, which is huge, because if you're paying $103 for one contract, again, you multiply by 100, and you're selling it for $97, you're losing on that $6 right off the bat. So this would be one of the options to actually avoid, just because of the volume and open interest. So again, you want to look at volume and open interest that are higher than 500, give you a fair price on your dollar and what you're buying and selling. So you want it to be very close together, so that way you're not really getting ripped off. So Apple, all these big companies, Apple, Microsoft, Tesla, Amazon, they usually have really good volume. So that's just something to look out for while you're deciding which options to pick.